Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, January 23rd, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the ES in the daily time frame. Right now, very narrow range going into the RTH Open, just 19.75 points of range. That is all of 30% of ADR. 29.5% of ADR over here, 19.75 points. This market has been averaging 66 on a 10-day basis and 63 on a 5. So we are clearly compressed compared to those averages. Right now, holding at the previous week's high and close price. A key level to watch early in the week, a failure there, and we could be looking at a retest back toward the previous week's low. Acceptance there, and you're opening up a return back to the high. So we have this range to be within here over the next week, 3,900 up to about 40.35. That's the previous week's range, and that's the range that's in play at the moment. So even if we were to go up here to the top end of the range, we could be looking at a fade back down within the range. Similarly, if we drop back, we could be here. We are currently compressing within a large symmetrical triangle. So if you look at the weekly time frame, you look at this daily here, very large symmetrical triangle. You have this upper trend line coming across the highs, you got this lower line, and you got this compression at the apex of this pattern. We could see further back and forth compression here for a little while until we see that breakout move. Once we see the breakout move, though, a break through 3,800, for example, or a push through 41, you open up a move that could be somewhere in the vicinity of 800 points of movement. This back end's 800 points, could be a significant move once we do get directional conviction here and an expansion phase. So more back and forth could be ahead on a swing basis until we're ready to see that big breakout. Taking a look here at the NQ, you'll notice the NQ here also holding within a larger wedge pattern. This upper trend line has been significant here. You have kind of a flat lower line, this descending wedge pattern that's still in play. You have the upper trend line that has been in place since the beginning of last year as well. Big time upper line. If we can see some sort of breakout through that upper line, we could be looking at a nice move to the upside. However, that line has not been broken over a year plus. So watching to see if there's some sort of failure up here that could lead to another rotation back to lows and perhaps through those lows up ahead. So keeping an eye up here on the upper line at around 12K. So taking a look at the intraday chart here for crude oil, or over the course of this last couple of days here, we've mostly been trending quietly higher. It's been an uptrending market here. Weakness has been defended, whether it's morning weakness here like we're seeing here, and we're seeing a reversal back up. We had one good rejection day here, which occurred just shy of the previous month's high. It looked like that might be the catalyst for a rotation back down, but a failed new low the next day has pushed prices back up. So an uptrend here overall. The key level here to really get going to the upside, 83.52. That's the big level right there. 83.52 is also the FOMC key level from September 21st. To push through that level opens up a 10-handle rally back toward 93.64, which is the top of the key range up there. So that's the upper half of the range. If there's a rejection in this zone and you can't get the transition, that's when you rotate back within the range. So right now, approaching that big time line in the chart, 83.52. If crude oil can push through that zone, it opens up 10 handles of upside up ahead. Taking a look here at gold futures. Gold has been extremely bullish over the last 4 months. It has started this year very hot. Previous year's closes here, it's tested it basically one time and bounced strongly off that zone. It's been holding above a rapidly rising 8-period average. Very clear uptrend. Weakness has been within range for the most part. So weakness within range. We haven't seen any deep pullbacks. And so again, not expecting a big pullback here. If we do get a little bit more weakness, say below 19.10, that could provide an opportunity to fling this thing back to the upside. The fact that this has pushed through 1900 suggests we have more upside to 2000 up ahead. 1900 is this zone here. To push through and hold that area, any pullback toward 19 could still be an opportunity to push this thing up to 2,000. So we're inside this range right now. To push through 1,900 suggests 2,000 is still up ahead as long as 1,900 continues to hold on pullback. So right now still trending up with more upside likely ahead. Lastly, looking at the YM. The YM here has been within this large developing range over the last 2 to 3 months. Still within that range right now. A little bit of a failed new low Friday with an outside day up and now holding. At the moment, again, still inside this range. We could see a rotation back up within the range here, but until we see a breakout from this range, we could see further development here. This range has quite a bit of energy built up, especially in the weekly time frame, and at some point here, this range could lead to a breakout that could be worth 4,000 to 5,000 points in range over the course of 2 to 3 months. So more development likely ahead here, but as soon as we get a breakout from this range, we could be looking at highly directional trending behavior. All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.